Welcome. My name is Van Richards. I'm a chartered financial consultant. And today we're talking about a stock that a lot of you know about, Facebook. It's kind of difficult sometimes when we start to talk about a stock that you might have a preconceived idea about, because you might have a favorable idea or a negative idea just because of some of the impressions that you have. And if you listen to a lot of the media, you see a lot of negative things about Facebook. But I think that one of the things we want to look at today is when we look at it as a business, and how is that business being operated and how profitable is it? Because when we look at stocks, I help you to learn more about stocks. I don't want you to just pick a stock. I want you to pick a company. And we want to look more at this company to see what the profitability is, what the losses may be, what the future may be. And that's really what we're going to talk about today. So let's go ahead and begin with the daily stock analysis. Okay, so let's get right into Facebook. Now I'm going to show you a short little video that I prepared. And, I know that you know a lot about Facebook, but do you know where they have their business? Do you know how the assets are divided? Do you understand where their profits are coming from? That's an important thing to think about no matter what company that you're discussing. And it's no different with Facebook. So let's take a look at some of the things that are behind Facebook and how some of the revenues are divided up and where it's coming from. And let's talk a little bit about how the profitability may or may not be toward the future. So let's watch this together. Facebook is by far the largest social media platform at $834 billion. It's probably down just a little bit today. It always amazes me that if the stock is off less than 0.5%, you take that 0.5% of the total value of that $834 billion. And that's a whole lot of money that comes and goes at the drop of a hat or within a period of a second. Let's take a little bit further look today at some of the ideas of how this company is going to be or not be profitable. And I always give you both options on there. And I have a method, just like you have a method for making a cake or how you have a recipe for making bread. I have a recipe for analyzing stocks, and I call it SEC. S stands for stability. And then the E is going to be the earnings, and the C is going to be the competitiveness. So as we go through this today, we are going to try to identify the stability, the earnings, and the competitiveness of Facebook. And from that, we can discern whether it's a stock that we want to own or we want to sell. So if we look at the stock in how it competes with other companies, its stability is based on its moat. Now, you might remember that Warren Buffett has the idea of the moat. He really propagated that particular concept. And a comment that he made in an interview with a group of students was basically that in business, I look for economic castles protected by unbreachable moats. I wish I was smart enough to have come up with that idea. Of course, then I'd be making the millions or billions like Warren Buffett. The big moat concept with Facebook is its network effect. It is huge. And you probably know this, but when we put it into numbers, those numbers are growing. In 2019, they had 2.5 billion monthly users, annual users, however you want to put it. It grew, and this was reported in the recent earnings report, to 2.7 billion in 2020. Another wide moat fact about Facebook is its proprietary data. There have been bad and good reports about this, but the fact is that Facebook has proprietary data on every single user. How many times have you used Facebook, whereas perhaps on Amazon or on Google, you've been looking up, I don't know, widgets, and then all of a sudden you're on Facebook and you see that there's widgets that come up in your news feed. They have proprietary data on all the companies, all the people that utilize their platform. The switching cost is also a factor. Although it's not really monetary for users because they're users like you and me, but if you have several users, there are some people out there that have thousands of users. I have my Facebook business pages that I have several thousand followers on. And if I decide that I want to go to another platform, it's really difficult to take those users with me, those followers. So the network effect does have some significant concepts to realize with Facebook. Now let's take a look at some of the highlights with the most recent earnings report. And the big one is the revenues have increased by 22% to 21.5 billion year over year. And when we look at the number of active users, we just talked about that in a minute ago, it's up 12% from 2019. The platform engagement has been increased because of the coronavirus pandemic. Hey, there's people that are just, you have your phone, you're sitting at home, you don't have anything else to do. Engagement is 66%. When we look further, we see that the average monthly revenues per user is $7.89. That's actually up about 9% from 2019. Lastly, we talk about the ads. I'm a user of Facebook. I run Facebook ads, and it's a substantial part of my advertising budget for my business. It's up 35% from last year. Now, let's look at some of the companies that Facebook competes with. And really, there's not as much competition. In a minute, we're going to look at the size compared to the other social media platforms, and you're going to see that there's not a big difference. Well, actually, that there is a huge difference. I said that opposite the way that I wanted to. Facebook itself is the blue line on the spaghetti graph. It's right around in here. And if you look really, Pinterest and Snap have been the really big gainers recently. And, if you're putting together a portfolio, and actually I have a portfolio that I've put together of about 30 internet stocks, and it'll include companies like Snap and like Pinterest because they're significant and they are actually benefiting from Facebook's prosperity. Let's look at the size of these companies. I mentioned this in the very beginning that Facebook is by far the largest social media platform that's out there, around $831 billion. I don't know if I would really consider Google to be a social media platform, as well as Google's kind of like the river, and Facebook is in the river. It's just a part of it. Google's a little different because of all the other different businesses that it has that it's involved in. But Google at 1.1 trillion, and Facebook is getting close to $1 trillion company at about 831 billion. And the closest company to it is Snap. Think about it. Snap is basically a millennial. It's not even a millennial platform. It's a Generation Z, the Generation Y platform. $66 billion. The closest one, really, probably you would have thought that Twitter is larger than it is, but it's really not. But remember, the past performance is not going to be a guarantee of the future results. But let's look at what some of the analysts are saying about Facebook right now. The artificial intelligence and the virtual reality products are actually going to benefit Facebook going forward. Also, Facebook, obviously, we've talked about the fact that it has the largest audience, and as we also identified, its revenue, its ad revenue is increasing significantly. Now, here's some of the headwinds that Facebook may be facing ending up in 2020 and going into 2021. One of the biggest things that we can look at right now is that its primary revenue is just advertisements. 80% of it. Go back and look at the video that I played at the very beginning. 80% of the revenue at Facebook is coming from advertisements. Another big problem is they have competition that's growing from platforms like Snapchat and like TikTok. If you look at the growth of Snapchat, it's been huge. Regulators can also come in. We might see some things where perhaps Instagram might be forced to spin off, or where there may be some other assets that may be forced to divest from Facebook, basically because of the type of atmosphere that's going on right now. And you'd have to be blind not to see that if you're on the internet. So regulations going forward from Democrats and Republicans could hurt the growth of Facebook. So we have to be a little bit cautious of that. Let's take a look at the earnings, because remember, when we look at the SEC, the stability, the earnings has been great. And there was one period in 2018, 2019 that they did go below the earnings estimates quite a bit. But if we go back over into 2020, even through the pandemic, they've actually benefited from the pandemic. Now, what Facebook is being rated at by Morningstar is as a 3-star company. Now, the star rating system, remember, is just going to be a valuation gauge. If it's going to be a 1-star company, it's going to be overvalued. If it's 5-star, that's very undervalued. I would call a 3-star GARP. Now, GARP means for growth at a reasonable price. And even though that the current price on Facebook right now is $2.93, I think it's a reasonable price. And actually, it's under what Morningstar is rating it at. Morningstar is putting its fair value at $306. That's about a 12.59% discount. Let's see what some of the other analysts are saying about Facebook. Wow, out of 32 analysts that are following it, 28 have a strong buy on this stock. I like Facebook a lot too, personally. Now let's look at, it's not impervious to market wins. If we look at what's happened over the past year, a year ago it started at 191.55, and then it's had a 53% increase over the period of the year, growing up to 293.41, which is where it ended today, which is really pretty good. Now, when we look at what some of the puts and calls are giving us an indication of. Now, the reason why I have started putting this up here is because I'm not trying to encourage you to trade options. I'm options as an identifier as to the breadth, the perhaps high and low, so that you can get an understanding is now a good time to buy Facebook. All right, let's look and see what's going on with the puts and calls. If you look at the green circle that's going around and around underneath the calls, there's 9,094 contracts that were outstanding when I did this report. And this is for the November 13th calls. Remember, a call is a contract to buy. It's a contract to buy. And that contract has a price. The contract price right now is $3.19. The price that they're looking at right now is $300. So if someone was actually going to exercise this call, in other words, they actually wanted to buy based on the fact that they own this, they would buy this call and they are hoping that it's going to go over $300. Remember, right now we're at $293. So they're hoping that they're going to get an increase over $300. And if they do, they would exercise the call. They would go in and they would buy the stock at $300. Now, you can also use options for protection. And what I mean by that is if the stock falls, then you could go in and you could buy the stock at the higher price, even though on the market it's lower. Now, let me slow down just a little bit and explain that. If you look at the circle that's red that's up here, it says that there's 1,480 contracts that are out at a strike price of $285. Now, let me explain to you what that means. That means that these people are thinking that if it goes below $285, I'm going to exercise that put. And that put's going to allow me to sell it at $285. So if the market would crash and it would go to, let's say, heaven forbid, $250, they would exercise that put and they would then have it at $285. That's when you hear a broker saying that they're buying protection on their stock. They're buying a put and they're buying at $285. No, there's a thing out there called a married put. And a married put, not to get too geeky on you, but a married put is basically when you own the stock and you own the put also. And if the stock goes down, yeah, you might sell it, but then you would exercise the put and you would buy it at $285 and you'd have the price. All right, or else you get the price for it. So anyhow, the whole idea behind telling you this is look at the breadth. Where 282 is the low, 305 is the high. So anywhere in between there is what the market right now is trying to price this stock at. Let's look at what some of the big wirehouses are saying right now. if we look on the low side is actually put out by Raymond James. Raymond James is putting a breadth on there, or else a limit from 280 to 320. They have a strong buy. So anywhere in between 280 and 320 is their buying. If we look at the Royal Bank of Canada is also looking for it to outperform the market, and they're looking for a price in between 320 and 350. Remember, we're at 293 now. So when you read about this stock, if you read what introduced this video to you, it said, is Facebook undervalued? I'm going to go out and put on a limb and tell you what my opinion is. And my opinion is this. My opinion is, yes, Facebook's undervalued right now. Will it go higher? It all depends on what's going to be happening in the market going forward. No, there's no guarantees on the stock market. Obviously, if you stick around and read my disclosure, you'll see I'm not predicting and guaranteeing anything. I'm just telling you that I think that this stock is undervalued right now. And I think that it's actually a buy. And I've actually got some intentions of buying it myself. So we'll just see how all this works out. Okay, so it's Friday, folks. It's been a crazy week in the United States, perhaps around the world too. No matter where you're listening to me from, I deeply appreciate it. Let me know what your comments are. Now, in the coming week, I'm going to be covering more internet stocks like Facebook. We talked about Alibaba this week also. I'm going to talk more about some of the different companies. We'll look at Pinterest and some other different stocks. So come back next week, and also continue to put your request into the platform wherever you're listening to me at. Make sure that you follow me. If you follow me on YouTube, you get notified when we broadcast or when I broadcast. Let me know what you think. And let me also know what stocks that you'd like to hear about. Now, I can't take all the requests. Remember yesterday when I told you that there's about 5,000 stocks. So if I cover one stock a day on business days, that'll only take me 13 years to finish all the stocks. So I can't do everything. But I'm going to try to follow some of your favorites. I have some important stocks that I think there are to follow, and I'm going to be putting those in. But I'll put some of yours in too, and I'll try to answer your questions as you post them. So thank you very much for watching today. And I hope that all of you have a blessed weekend. Have a great weekend, folks.